Assalamualaikum and greetings to everyone. My name is Laman Hakim, and we would like to present two companies, Sapura Energy and Repsol Group. First of all, I would like to introduce my crew, my members, Nina Hazika, Nondina Chera, and Anisiera. So for the first slide, executive summary. Sapura Energy Berhad is a global provider of integrated energy service and solution that operates across the entire upstream value chain. The mission of Sapura Energy is to earn customers' confidence by adhering to a set of core values known as SHARP, which are simplified as being safe, honest, agile, respectful, and professional. For Repsol, their mission is to provide energy to society in an efficient and sustainable way. Their vision is to be a global energy company that relies on innovation, efficiency, and respect to laid out several principles which are and respect to create sustainable within a value in the service of societal progress. To make this mission and vision a reality, Repsol laid out several principles which are result orientation, accountability, cooperation, entrepreneurial attitude, and inspiring leadership. Next slide, the capital structure. So for the operating income, also called income from operation, takes company's gross income, which is equivalent to total revenue minus COGS, which is cost of goods sold, and subtracts all operating expense. So here are the calculation. As you can see, for Sapura Energy, the operating income is 301,812,000 before taxation, while for Repsol the amount is 3,757,000 in euros.
So next capital structure is net income. Net income is the amount of money left over after all the costs such as salary, wages, cost of commodity, and also taxes has been paid. So as we can see in the table provided, we can see that Sapura Energy has been experiencing a loss income of 160,252,000, while Repsol has been experiencing profit of 2,499 million euros.
Net is earning per share. Earning per share is a company profit that has been divided by outstanding share of common stock. Earning per share earned will be used to show the company profit. For Repsol Group, earning per share earned is 1.64, while for Sapura Energy, earning per share they have is negative 10.05. Higher earning per share is better and more profitable.
Next is return on equity. Return on equity can measure the profitability of the company and how the company generates its profit. For Sapura Energy, the company return equity is negative 1.8%, while Repsol Group is 11.2%. The higher the ratio, the better the company's performance. So, Repsol Group is better than Sapura Energy because it has a higher ratio.
So the next slide is the alternatives. So operating income is a measurement that indicates how much of company's revenue will turn into profits eventually. The alternative for improvement on operating income for both companies is to manage the expense cost by reducing wastage costs that can increase profitability of the company. The companies should put system and process in place that will enable the companies to get the most from their resource. For example, both companies could regularly monitor how many employees hours it takes to perform specific tasks or provide service. By reducing the wastage cost, Sapura Energy and Repsol could increase their profits by 10% and 5% respectively.
Net income is a crucial measure for the lenders as well as the investors. So one of the alternatives to improve is to lower the production cost without compromising the quality. So to reduce the production costs without sacrificing the quality, the simplest choice is enlargement. For example, Repsol company can buy their raw materials in bulk because usually wholesaler will give discount if the customer buy their product in bulk. So after implemented the alternative, the Repsol Group may increase their net income at least 12%, which give the total of 2,798.88 million euros.
Next is alternative to improve earning per share. Earning per share is important financial measure to show the company position to provide a profit for each shareholder. The alternative for these two companies to increase the earning per share is increase net income, and if negative, they will increase dividend. For Repsol, they can increase net income. For example, in year 2021, Repsol Group has 2,499 million net income. After using the alternative, Repsol Group can increase the net income at least 50% and get the new net income. So this company can get 1.89 earning per share. For Sapura Energy, the board has decided not to recommend a dividend for shareholder. Dividend will also increase the earning per share. If Sapura Energy can make a dividend for shareholder, they can at least make 40% dividend for shareholder. So they can have 749.81 million ringgit dividend need to pay. Company can have earning per share is 10.10.
Next is a return on equity. The alternative is not only improve the value of ratio, but also increase the expectation of the shareholders to the company. When the ratio is negative, it does not mean that the company bad in performing the financials. Sapura Energy can use the financial leverage effect, which can reduce the value of shareholders' equity. With this alternative, the value of shareholders' equity will be lower because the number of shareholders' equity will be deducted with the total debt. For Repsol Group, the company can distribute the idle cash that may be a problem to the company. This alternative can be used by distributing the cash to the shareholder that can improve the return on equity. For example, Repsol pays 5,000 million euro to shareholders. The value of shareholders' equity will be 19,320 million euro.
So for the next slide is graph. As you can see, based on the graph shown, an increase in operating income after implementing to reduce the wastage cost. For Sapura Energy, the operating income increased by 10%, while for Repsol, the operating income increased by 5%.
Based on the above graph shows that an increase in net income after implementing the cut cost for Repsol and Sapura Energy. So as we can see, the result is the lost income in Sapura Energy may increase by 12% and Repsol up to 8%.
Based on the graph above, show the increase of earning per share after making implementation on net income and dividend of common share. For Sapura Energy, earning per share increased 0.05 and for Repsol Group, earning per share increased by 0.25%.
This is the graph for ROE. Based on the graph above, it shows an increase in return on equity after improvement on shareholders' equity. For Sapura Energy, the return on equity increased 7.6% and Repsol Group, the return on equity increased by 1.7%.
Next is value of the firm without debt. Value of the firm without debt refer to the firm do not take their debt in determine the value of the firm. Calculations show the Sapura Energy obtained the value of the firm without debt more than RM 5 billion while Repsol Group obtained more than 7 billion euro. For business buyer, they will look into the company with a low debt on the performance of strong company rather than business with no debt. For the Repsol Group, they have lower net debt compared to the Sapura Energy. Debt within the Repsol Group are well managed to ensure the company performance is a good level. Next is value of the firm with debt. Value of the firm with debt is calculation of value of the firm include debt. This debt is indicate whether the company is performing well or not. Calculations show the value of the firm with debt. Firm with the debt have the higher enterprise value. For Sapura Energy, the enterprise value is more than RM 50 billion while the enterprise value of Repsol is more than 30 billion euro. If the buyer want to buy a business, they will choose Sapura Energy. Repsol has the higher debt than Sapura Energy. That is because if buyer want to buy the firm, they need to pay all of that after they buy the firm.
Next slide, value. The total value of company's equity, also known as market capitalization, is the market value of its equity. So this is the calculation for value of equity. And for the cost of equity is the return that a company requires to decide if an investment meets capital return requirements. So this is the calculation for the cost of equity.
Next is weighted average cost of capital, WACC, after market capitalization. So this is the calculation. By using the WACC, the company can determine to use debt or equity to finance its purchase. The investor and analyst will use this ratio to determine the company's performance. The Repsol Group ratio is higher than Sapura Energy ratio. Based on the calculation above, it can be concluded that Sapura Energy has better performance in WACC than Repsol Group. Next, how is a company financing its asset? A company needs to finance its asset to determine the ability of the company in debt. Usually, it can be measured by two ratios, which are debt ratio and time interest earned. This is the calculation for debt ratio. Repsol Group debt ratio is lower than Sapura Energy debt ratio with 59.48% and 60.57% respectively. Repsol Group is a better company to borrow from banks than Sapura Energy. Next ratio is time interest earned. This ratio measures the company's ability to debt based on its current income. The higher the ratio, the better the company's performance. Repsol Group has higher times interest earned than Sapura Energy with 53.75 times than 9.41 times respectively. For Repsol Group, the company has less risk to investors and creditors in terms of solvency. For Sapura Energy, the company had failed to meet the obligations which could lead them to bankruptcy.
Is the manager's company generating an adequate operating profit on the company's asset? So the amount interpreted as, we look at Sapura Energy, a 3% operating income margin is the same as RM0.03 cent operating income for every 1 ringgit of revenue. The next ratio is ROA, which is return on asset. So as we can see from the table, Sapura Energy's ratio is negative 1.41%. In other words, each ringgit that Sapura invested within asset throughout the year made RM0.088 cent of net income. The last ratio is the asset turnover. So Sapura indicates that is not efficiently using its asset to generate sales due to lower asset turnover ratio. Conversely, Repsol indicates that the company is more efficient at generating their revenue from its asset due to the higher of the asset turnover ratio.
Conclusion: a company's capital structure is the specific combination of debt and equity it uses to fund its overall operations and growth. One of the two major ways a company can raise funds in the capital markets is through debt. And companies with high leverage ratio and aggressive capital structure utilize more debt than equity to finance their assets and fund operating activities. Last but not least, despite the global pandemic, Sapura Energy was able to reap the benefits of operational investment established in recent years, while Repsol had progressive recovery in demand and profitability in the second half of the year. That's all for me. Thank you.